What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is September 2nd of 2022. Welcome to our late night edition. Let's go through these box scores and let's talk about this Memorial Day market mayhem. The S&P 500 finished down 1.05%. Our NASDAQ QQQ got hit down 1.41%. Our IWM small caps, surprisingly, these are very risk on and they were actually a laggard on the downside. They closed down 0.78%. Our dogs of the Dow finished down 1.04%, and the ARK Innovation ETF was the hardest hit today, down 2.71%. We are seeing some headlines saying that investors are finally starting to pull their funds out of that ARK Innovation ETF. Looks like they are losing faith, and I don't blame them. It's really been like we've now been in like a year and a half to 2 year bear market in a lot of these high growth stocks, crypto, all this stuff. Pretty much all these indices closed towards the bottom end of their day's range. But we did have, puzzling, again, a mixed board across the volatility spectrum. We had breadth that was very weak. We had 27% advancers in the small caps. We ended up finishing out with 38.2% up volume, and the trend model remains at a -1. The NFP data that came out this morning. So honestly, my baseline expectation heading into today was, hey, the market's very oversold. We got that really nice hammer candle yesterday, and if the NFP data comes in a little bit light, maybe that'll give the market some reprieve. Maybe they'll say, oh, okay, the Fed, their policy's working, and we might get a rally in bonds, maybe a sell-off in the dollar, maybe a nice little rally into the holiday, but it did not end up panning out that way. Non-farm payrolls came in at 315,000 jobs created. The consensus was 300K. Oh, so I guess it did come out a little bit ahead of that estimate. I saw from there's a bunch of different estimates. One of them was 318K, came in at 315. But nonetheless, I think it pretty much came out, it's perfectly fine. It's not like, oh my gosh, 500K were created. The unemployment rate actually ticked up. Average hourly earnings rose a little bit less than expected. And the labor force participation rate actually ticked up. So these are all, this NFP report I thought could give some reprieve. Well, we ended up getting a bloodbath across the board. And I gotta say, was this really horrible? I mean, it is some pretty red action, right? But it's not like the market crashed. The market ended up finishing down about 1%, which is never what we want to see. But to be honest, if there's players that are still getting liquidated out there, they gotta get their liquidation on. There's nothing we can really do in terms of oh my gosh, let's speed up this process. In terms of these corrective sequences, once players really get on the wrong side of the trade, a lot of times they will look for any sort of market strength to really just sell into it. I gotta say, the way it all went down was very weird. We'll touch on it when we go to the indices. In terms of sectors, we did have the MSOS Cannabis ETF finish out positive. We had the Energy ETF positive. Gold miners were actually our best performer, and pretty much everything else had a sell-off. Style factors. Worst performing style factor was minimum volatility. So it does appear that this sell-off is getting pretty mature because the min-vol space, that's typically where everyone hides out, because they want to avoid this sell-off. So then once that group gets hit, that presents challenges for a lot of fund managers that are, trying to be quote-unquote safe. High beta was actually, wait a minute. Yeah, high beta was actually one of the best performing groups. It was international value and then high beta. So the composition of this sell-off was definitely weird, how small caps were lagging to the downside. The whole thing just seemed, I'm not going to lie, very odd. Let's take a look at the headline indices. And it always helps, again, getting off the desk. If you're just sitting at the desk and you're like, oh man, market gapped higher, up, now market's going down, up, it's going back up, it's going down. If you're kind of just sitting there, looking at it in that way, and you're really this has to happen for me today or else I'm going to be super frustrated. The market's going to frustrate you time and time again. Especially we're in a pretty tough sequence right now. We are in this right here is actually, we just experienced day 13 of the sell-off. And we looked at the fall sell-off in 2020 that lasted 15 days. We looked at the sell-off in 2021 that lasted 20 days. So, perhaps this one is one of the shorter ones. It's pretty much done. Perhaps it's the longer side. We still got a week. But in those sell-offs, we did have bounces. And I got to say, for this sell-off, we're really not getting bounces. We had, technically one bounce day. It was the 25th. But other than that, it's pretty much just been straight line down. What I will say though is this is kind of odd. Like, so we had, let's look at the 5-minute candle just because you can see how schizophrenic this market was today. And look at this. So like in the morning, it was like, yeah, NFP number out. This is great. And then right off the open, we had a pretty sizable dip. We almost retraced all of it. And then we ended up rallying higher again. Saw some nice action, whatever. And then around lunchtime, noon, you can see the 5-minute candles just started picking up at 12:20. Like some big seller just like stepped on the gas. And we just cascaded lower from lunchtime on. It was very, very odd. And, we cascaded into this daily value area. We ended up tagging the bottom of the daily value area, and then we ended up rallying into the bell. So it was really weird, like last 15 minutes rally. And then even after the market closed, like if you notice, like ES, it shows it's down 0.89%. If you look at SPY, it shows we're down 1.05%. So there were buyers that stepped in after the close, which I think that's a pretty good sign. Like the one thing that I was looking out for is, are we going to undercut the lows from yesterday? And that definitely would have been like, wow, it would have been crazy. But yeah, we actually came just shy of yesterday's lows. We missed it by a hair, and then we ended up moving to the upside. So like, it seems if you were sitting at the desk the entire day, it seems like, oh my gosh, all these emotions, like what happened? The market went down. But honestly, like if you're just looking at the chart, it just kind of looks like, yeah, we had a hammer. Now today was a little bit weaker. If you look at prior sell-offs, this happens a lot where there's those players that just continue to puke. And I'm assuming they're getting like margin called, or like their fund is getting liquidated, or like they just have to take their risk down. And this happens quite frequently where like you get, like a green candle, and then you end up just getting like a bearish engulfing of that candle. It's never convenient, if you're like, man, I was long and I wanted to just make money today. It's definitely inconvenient, but it's kind of like, it's the way of the world in markets. It doesn't always work out on our timetable. But I think the way the market closed, honestly, I think it's all right. We do have to watch out for this VPOC down here at, what is this, 38.68 spot 5. That could be a logical endpoint. Let's say if Monday's like very ugly again, maybe we end up taking out that level. But honestly, like with how just like panic selling we had today, the fact that we didn't end up taking out the lows, I think that's a good thing. So we'll have to see for next week. That's the thing about the markets. It's like a story. It's almost like a story or like a good movie, or no, like a good like TV series where like you got to wait to see the next episode and you're like, man, like it just left you on the edge of your seat. It's kind of how the market is. And that's honestly how I felt about it today. I'm like, man, I want to see the next chapter. So let's take a look at the NASDAQ. NASDAQ did a very similar thing. We came very close to yesterday's lows, but we did not actually undercut them. We had Russell 2000. This one was the strongest. And this one only down 0.54%, including the after hours move. So is that too scary for the small caps? Not really. A down 0.54%. It's nothing too crazy. Dow Jones down 0.87%. So yeah, all these indices definitely got hit. And let's take a look at the VIX, what that did. VIX ended up closing out red. And it's kind of crazy. Like with the VIX at 25, it does imply a daily move of around like 1.4% or somewhere around that neighborhood. So that's why, like, even though the markets are falling, they're just not falling by that, those huge numbers every day. So the VIX, it's just not really exploding out. So yeah, let's take a look at trades for the day. In terms of trading, I came in today. I'm not going to lie, I really thought the market was going to rally off that number. So I was like, you know what? I don't want to screw this up. I'm just not going to really do any trading today because the market's going to do what the market's going to do. I feel comfortable with how I'm positioned. But then things really just took that turn for the worse at lunch. I did actually stop out of my NVIDIA common shares. My stop was $136, but we just got close enough. And honestly, like this name, it's just not really showing any relative strength. I sort of bought this one thinking that maybe the name would like flip green and just like bounce very quickly. And it ended up just being like a bigger sell-off than I thought. See, I took about a 5% loss on this one. And that's okay. That's part of trading. Like sometimes you put an idea on, doesn't work, take your stop, and then you just keep it moving. And that was the only trade that I did. I did send out a limit order to close. I have some SPY call options on the books, and I gotta say, like, in terms of like heartbreakers, this was definitely it. Where I sent out a limit order, these were marking at like $9 intraday. I was like, let me send out a limit to sell them at 960, and limit did not end up hitting. Market took a turn for the worse. I think these are marking right now at like $5 or something. But honestly, like if we rally next week, these will go right back in the money. And this is like a starter position for me, so I'm actually considering adding to these SPY September 16th 397 calls. So yeah, in terms of trading, I was not really active. I do have long positions on the books because I did anticipate we were going to get some sort of bounce. And yeah, I'm just going to keep those on the books because I do think that, while everyone's getting super, super negative, I think it's possible that, we could actually be at a turning point pretty quickly. Just given how much we've already sold off. The correction in fall of last year was like much smaller. It was like a 5% pullback. And the year before that, I think it was about the same. This pullback, it's already 9%. And we're already seeing like, signs that inflation could be cooling. So like, yeah, I think people are kind of like dreaming. Like I see people that they're like, yeah, we're going to like undercut these lows and like, oh my gosh, it's going to be horrible. Like, market's going to hell in a handbasket. And like, if you think about it, the inflation problem is much closer to being solved today than it was those months ago when we hit these levels and buyers stepped in. So I would imagine there's going to be some, cooler heads that go, hey, like the next inflation report's probably going to be another deceleration. I at least think we're going to get a bounce from here. We'll have to see what happens. Again, it's always a page turner in the markets. One name that really just stood out to me that I'm considering just continuing to build out my position is this CSIQ. It's a Canadian solar stock. And while the market has had its corrective sequence, this name is just going sideways. And yeah, it had a red finish today, but finished right on top of that monthly point of control. And this 50-day simple moving average is starting to catch up. So this one definitely stood out. PRVA, which I put on yesterday, this one's also acting pretty well. This one finished up 0.71% today, not too shabby. And it's right on this monthly value area high, so I definitely like this one. And then other than that, there's not really too many names that are sticking out. Again, we're going to be doing a lot of homework this weekend. We do every single week our top-down weekend market analysis video. We also do our weekend watch list video. If you'd like to receive those, go to pristinecapital.net. Go ahead and get subscribed, and you'll definitely receive those videos. BJ, this one also stands out as just a name that's held up pretty well during this sell-off, right? I mean, it was down about 1.5% today, but still above the 20-day simple moving average and still above this monthly value area. So definitely a lot more homework to be done. But yeah, with that being said, if today was like a frustrating day for you, I talked to some of my trading friends and they were like super like discouraged and whatever. It's kind of the name of the game. Once you get to like day 13 of the correction, you'll notice like people start to get more like despondent. It's like, oh man, the market will never go up again. Like those are typically the things that you start to like hear. You start to hear people like quitting on trading. Like, people just get really down on themselves. Like for me, like I've been through much, much tougher sequences in trading. So like this, honestly, like this is not really too bad. And we were, short the market for the vast majority of this corrective sequence. So right now, like, it's all about just being patient and kind of just putting things into perspective. Like, hey, this market, there's a lot of big players in it. If players are still getting liquidated, that's all there is to it. All right, everyone. We'll see you all next time. See you all on Monday.